Greetings. Thank you for checking out Keystone TV. The fact that you're watching this video today shows that you care about your financial well-being and want to improve your financial future. And what I want to share with you today is I want to compare gambling and the stock market. Because a lot of people walk into my office and they say, John, I don't know if I want to play the stock market. I don't know, it just feels really risky and I'm just not certain that that's for me. Well, let's compare this to actual gambling, right? Like you walk into a casino and you sit down and you play, right? There's craps and pai gow and roulette, and let's say you sit down and play blackjack. The probability of winning in blackjack is around 42.22%, right? Is what all the metrics say. Yet we play blackjack, we have fun, knowing that we're going to lose about 60% of the time, right? That's how the casinos build the massive casinos. They don't lose to us as gamblers, right? That are walking into their casino for some entertainment. Now, think about if right next to the blackjack table, there was 3-card poker and craps and roulette, and then there was this game called the stock market game. You thought, what's this? A stock market game? That's interesting. Now here's how the stock market game works. 75%, roughly 75% of the time, over the last 90 years, you win. So 3 out of every 4 years you win money. Or excuse me, 3 out of every 4 times you play the game, sorry, I gotta get back to our illustration here. 3 out of every 4 times you play this game at the casino, you win. 1 out of every 4 times you lose. In the years that you win, you average about 15, 16%. In the years that you lose about 10 to 12%. How long would the line for that game, the stock market game, at the casino be? Imagine that. You said, you know what, I'm going to make about 10% a year on my money for 90 years, and that'll come via a sequence of returns where about 3 out of 4 years I make money, 1 out of every 4 years I lose money. That's actually the stock market. That's real historic data of the stock market. Now, does that mean that the next 2 years it's going to continue to make 10% a year? Does it mean that over the next 3 years it's going to lose money or make money? We don't know. Right? That's the thing about the stock market, is the uncertainty of when and how these returns occur frighten people. Right? They scare people. But just think about it from a practical standpoint relative to the illustration I just said. How crazy is it that 75% of the time you make money in the stock market, right? It's capitalism. Companies out there are producing goods and services and making profits. You're able to participate in that, and you should do that from a global diversified portfolio perspective. You can make great returns and you make money well over half the time. But for some reason, when we put it within the context of the stock market, there has been so much misinformation out there. There have been so many people that have led investors astray, and there have been so many conflicts of interest by brokers and insurance agents and annuity salesmen looking to put money in their own pocket, and they've provided really bad advice. And unfortunately, the media contributes to this a lot as well, because what's the media's objective? Well, it's to get eyeballs so that they can make money advertising, or it's to sell magazines. And the reality is, we all know fear sells. Right? Telling people, hey, 3 out of every 4 years the stock market goes up, build a really prudent portfolio, and then don't get emotional with it and stay disciplined. That's not sexy, right? That doesn't sell magazines. That doesn't get eyeballs on Bloomberg, but it's the truth. And you need to know that. So start reshaping the way that you think about the stock market. It absolutely goes up and it goes down, and there's volatility. And from year to year, it's very unpredictable. But given enough time, you make money, and you make money more than half the time. So you don't need to be fearful about trying to figure out which way the market's going to go. Work with an advisor, work with a good independent financial advisor that can help you understand how to build out a good globally diversified portfolio for your risk tolerance, for your objectives that will meet that, and then find somebody that'll help you stay disciplined to that plan. Hopefully this was helpful for you. If you liked this video, you can see more of them at KeystoneWealthPartners.com at our website, or our Facebook page at Keystone Law Firm and Wealth Partners. Have a great day.